In The Intelligent Investor, Benjamin Graham presents timeless principles of value investing that have influenced countless investors. Graham emphasizes the importance of a disciplined approach to investing, focusing on fundamental analysis and long-term strategies rather than market speculation. The book serves as a comprehensive guide for investors of all levels, advocating for a defensive investment strategy that prioritizes capital preservation while seeking consistent returns. Graham's wisdom encourages readers to adopt a rational mindset and develop a robust investment philosophy. Graham begins by distinguishing between investing and speculation, emphasizing that investing involves thorough analysis and a commitment to understanding the underlying value of securities. He warns against the pitfalls of speculation, which relies on market trends and emotional decision-making. This chapter sets the foundation for a disciplined approach to investing, encouraging readers to focus on long-term strategies rather than short-term gains. In this chapter, Graham introduces the metaphor of Mr. Market, an allegorical character that represents the stock market's irrational behavior. He explains that investors should view market fluctuations as opportunities to buy low and sell high, rather than emotional triggers. By understanding Mr. Market's mood swings, investors can make more rational decisions and avoid falling into the trap of market psychology. Graham categorizes investors into two types: defensive and enterprising. Defensive investors seek to minimize risk and prefer a passive investment approach, while enterprising investors actively seek opportunities and are willing to engage in more research. This chapter provides strategies tailored to each investor type, emphasizing the need for a clear understanding of one's investment style and risk tolerance. Graham introduces the critical concept of margin of safety, which refers to the difference between a company's intrinsic value and its market price. He explains that this principle acts as a buffer against errors in judgment or market volatility. By investing with a margin of safety, investors can reduce risk and enhance their chances of achieving favorable outcomes. This chapter emphasizes the importance of understanding financial statements when evaluating investments. Graham provides guidance on how to analyze balance sheets, income statements, and cash flow statements. He encourages investors to look for companies with strong fundamentals and to avoid those with excessive debt or weak earnings, laying the groundwork for making informed investment decisions. Graham elaborates on the principles of value investing, advocating for a strategy focused on acquiring undervalued stocks. He explains that value investing involves patience and discipline, as it may take time for the market to recognize a company's true worth. This chapter highlights the importance of a thorough analysis and a long-term perspective when identifying investment opportunities. Graham discusses the significance of dividends as a source of income and a sign of a company's financial health. He advises investors to consider dividend-paying stocks as part of their investment strategy, as they can provide a steady cash flow and signal a company's stability. This chapter reinforces the idea that dividends can enhance total returns and provide a cushion during market downturns. In this chapter, Graham explores how market psychology influences investor behavior and stock prices. He explains that emotions like fear and greed can lead to irrational decisions, causing investors to buy high and sell low. By understanding the psychological factors at play, investors can maintain a rational mindset and avoid common pitfalls, emphasizing the importance of discipline and emotional control. Graham advocates for diversification as a key strategy to mitigate risk in investing. He explains the importance of spreading investments across various asset classes, sectors, and geographic regions. This chapter provides guidelines for building a balanced portfolio that can withstand market fluctuations, ensuring that investors are not overly exposed to any single investment. This chapter focuses on bonds as a viable investment option for conservative investors. Graham explains the different types of bonds and their risk-return profiles, emphasizing the role of bonds in providing stability and income. He encourages readers to understand the bond market and consider including bonds in their investment strategy, particularly for defensive portfolios. Graham emphasizes the importance of a long-term investment strategy, urging readers to adopt a buy-and-hold approach. He discusses the benefits of holding investments over extended periods, allowing for compounding returns and reducing transaction costs. This chapter reinforces the idea that patience and discipline are essential for successful investing, providing a roadmap for achieving long-term financial goals. In this chapter, Graham identifies common pitfalls that investors face, such as following trends, overreacting to market news, and neglecting due diligence. He provides practical tips for avoiding these mistakes, emphasizing the need for a disciplined and informed approach to investing. This chapter serves as a valuable guide for readers to navigate potential missteps and stay on track toward their financial objectives. Graham underscores the importance of developing a robust investment philosophy that aligns with individual values and risk tolerance. He explains that having a clear framework for decision-making can help investors remain focused and disciplined, especially during market turbulence. This chapter encourages readers to define their investment principles and stick to them over time. In this chapter, Graham shares insights from successful investors and their strategies. He highlights the importance of continuous learning and adapting investment approaches based on market conditions. By studying the successes and failures of others, readers can gain valuable lessons that inform their own investment journeys. Graham concludes with practical advice for readers to cultivate smart investing habits. He encourages individuals to take ownership of their financial education, stay informed about market trends, and remain disciplined in their investment approach. This chapter serves as a motivating reminder that anyone can become a successful investor by committing to learning and applying sound principles.